Okay, let's continue. Right. So you can see markup and margin. This is exactly the same from the things that we've already, I think I explained you this in some other class as well, but we will recap it over here as well. Okay. Now these formulas are not relevant at this level. When we'll do the interpretation chapter, the ratios chapter, this will be used over there. Okay, right. So we have to basically look at the markup and margin concepts over here. The markup has some separate things, margin has some separate things. Okay, right. Okay, so can you see the screen and hear me clearly? Kindly confirm.
Sorry, I didn't know that I was on mute. Sorry,
No problem, no
yes.
problem. I
Mm.
actually, it was giving me some kind of error over here as well, that your internet is slow, but I think it's fine right now. Okay. Now,
Okay.
we are doing the markup and margin as well. This again, I may explain to you in some previous classes, but still we have to look at it again over here. Okay. Again, these formulas will be important once we do the interpretation chapter. I would suggest not to look at these formulas right now. Okay. Now I'm going straight into these notes and I'm going to explain this, the fourth method over here, right? So first is this markup. We'll discuss this one, and after that we'll discuss the margin, right? Now for markup, there are three things to consider. In both of these things, there are three things to consider, right? So the first thing over here is selling price, right? After that, just a second. First thing is selling price. After that, we've got cost, right? And after that, there is profit, right? So you know that if we take out the cost from the selling price, we obviously get to the profit figure, right?
Yeah.
Because that is what the profit we are earning over here. And similarly, if we add some kind of a profit markup into a cost, we reach up to selling price. Now there are two things similar, two things fixed over here, right? Let me write this over here as well, because these are the two factors. These are the same that we have to look at margin and markup in both of these. Okay. Now in markup, first I'm going to talk about markup, and after that I'm going to go towards margin. Okay. In markup, what happens is that always remember the fixed figure over here is cost. Cost always remains 100% over here. Regardless of anything, cost always remains same. So it's basically a game of percentages. If you understand this percentage game, you're basically halfway there. We just have to apply it with the monetary amounts. I'll tell you with some examples as well. So the fixed thing in this is cost. Cost is always standing at 100%. It never changes. It's always constant. Okay. Now let's say if there was a profit markup given in the question of, let's say, 30%, right? So if this is 30%, 30% I'll add in the cost, then I'll reach upon the selling price, which will be 130%, because it's a sum of cost and profit, right? And
Yeah.
similarly, if I take out this 130 from 100, I'll just be left with 30%, right? So what happens is, let me write the description of this. 1 second. So based on profit, the selling price changes, right? So the two interchangeable, the variable figures over here are profit and selling price. Always remember, cost never changes from this, right? The easier the easier way to understand markup is, it's a very childish approach, but I tell most of the students like this, to learn it like this, and they tell me that it's very helpful. Even when I was on F3 level, I learned it like this. Okay. So the reason for understanding the why cost is 100%, you can remember it with just one thing, right? It's very unique in this markup word, but not in the margin. You can see that this word K, right? This creates a sound of K over here, right? Like K. So cost also has a word of K, and markup has also a word of K in this, right? So you can easily remember it. Like whenever you say markup, there is automatically that sound effect. So obviously you know at that point that cost is 100% always in this case. This is a
Yeah.
easier word. This is a easier way to learn it. This may suit someone, this may not suit someone, right? So you can also use this for understanding. Now, similarly considering, let's say if profit was 70%, right? So the selling price in this case would be 170%. Similarly, if it would 60%, then it would be, the selling price would be 160%. So it's all depending on the profit that the selling price changes in this case. Okay. Now talking about
Okay.
margin, I'll first discuss margin and then we'll do each of the examples regarding these. Okay. Now talking about margin, it's also very simple. In margin, always remember that cost is not fixed. The selling price in this case. The selling price is fixed in this case in the margin. Okay. So cost is not anymore fixed. The margin is in the margin, this selling price is fixed. So what happens is that according to the profit, let me write the description of this as well. So based on profit, the selling price does not change. Based on profit, the cost changes. Okay. So let's say there was a 30% margin on one product, right? So that means selling price is 100% fixed, right? And cost is automatically how much? 70% in this case, right? So this is the concept of margin and this is the concept of markup. It's very easy to understand. Now let's take some examples. Let's, connect it with some monetary values, some numerical values. After that, you'll surely get it more clearly. Okay. Now markup, let's create one example over here. Let's say Mr. A had sales of, let's say, $100,000, right? And he earned markup of 40% on cost. So whenever, even if the question does not say anything regarding, there is no word used, like there is no markup word used, there is no margin word used, I'll tell you that as well, that how do you pick up which one to use, right? So one thing,
Right.
always remember, when you have to use the markup one, always remember you have to find this word, like some percentage of cost, right? Because if there is some percentage of cost, that is what we are understanding over here. Cost is 100%, right? And everything in the world is also taken as a percentage of 100%, right? So if the percentage of the profit is a percentage of cost, that means this is a markup, right? But in margin, what happens is, if there is something as a percentage of selling price, that is called a margin. So if there is no word given in you in the question, regarding specifically describing the markup or margin, you can pick it up easily, clearly like this. Okay. Now let's complete the question. These things we'll discuss future in the questions as well. So markup is of 40%, right? And let's say we have to find the cost. We have to find the cost in the monetary values. Okay. Now I'll write the same sketch I'll create over here. First of all, selling price, then cost, and after that, profit. Right. So the selling price, first of all, we have to write the percentages over here. We have to ascertain the percentage over here, right? So markup, we know one thing for sure, that 100% is the fixed amount for cost in this case, right? Now
Yeah.
markup percentage is given. Markup percentage means this is the profit that we're earning, right? So 40% is the profit. That means how much will be the selling price? 140%, right? Now we have to ascertain the monetary values with it. So what happens is, you can see that sales is given over here. How much? 100,000 of sales. So we'll write this amount along with the sales. 100,000. This is the sales amount. What do we have to find? We have to find the cost over here, right? So there's a very simple formula for this. It's very extremely simple. It's exactly the same sales tax figures that I explained you, right? So what we do is that 100,000 is representing 140%, right? 100,000 divided by 140, it's just simple maths, right? And we multiply it with the amount that we need. So what do we need? We need the cost over here, right? So we are currently standing at 140%. We need to jump down at 100%. So what we do is multiply it by 100. So this will give us the figure of cost. Let's say we had to find the profit. So for finding profit, what will be multiplied with? We'll multiply it with 40. So whatever the requirement is, we have to multiply it accordingly with that requirement, right? So what do we do? 100,000 divided by 140 into 100. This will give us the exact figure for cost over here. Okay, so let's calculate this. So 100,000 divided by 140 into 100. So this is approximately 71429. 71429. Okay, so this is exact figure of cost that we have got by just using a markup percentage. That's the magic of this concept, right? If we have found the cost over here, 71429, obviously the difference of these will be the profit over here, right? So this is the concept of markup that you have to remember, that always in this case, cost will always remain 100%. Okay, right? Got it?
Okay.
Clear? Okay, now let's take an example of margin as well. Let's say Mr. B had, I'm just twisting things a little bit here, just making it a little bit, like a test. So Mr. B had, let's say, profit of $50,000, right? So over here, I have ascertained the dollar value with profit, right? So he is earning margin of, let's say, 40% again, right? So margin of 40%, we have to find the sales. Okay, we have to find the sales. Now, if I write the margin parameters over here, that is selling price, then we've got the cost, and after that, the profit, right? So one thing we know for sure in this case, that selling price is always fixed in this case, right? Not cost
Yes.
anymore, because that was markup. This is margin, and margin selling price is always fixed, right? If we have got a profit margin of 40%, we'll just write it over here, 40. That means what is the difference in between them? 60%, right? So that means 60% is the cost in this case. It will lie in between selling price and profit. Okay. Now, what do we have to find? We have to find the sales. And what figure are we given over here? The profit one, right? So we'll write this
Mhm.
$50,000 along with the profit percentage. Now it's very easy to jump to the sales. It's very simple. What do we have to do? 50,000 divided by 40, because this is representing 40%, you can see, right? So 50,000 is representing 40%, and we have to multiply it with the requirement that we're given. We have to find sales, right? So that means we have to jump to 100%. Okay, so what do we do? 50,000 divided by 40 and multiplied by 100. So this is 1,25,000. 125,000. This is the correct figure for the sales, right? Now imagine if we needed the cost over here. If the requirement was to find the, one second, if the requirement was to find cost over here, right? So for finding the cost, what we have done, 50,000 divided by 40 multiplied by 60, because the requirement over here has changed to 60%. Okay, so whatever the monetary value is being represented by, we write it in the denominator under the fraction, and whatever we need to, jump to, whatever we need to reach to the destination, we write the destination after the multiply sign. Okay, so this is the very simple concept in markup as well and margin as well. Okay, got it? So this topic is that simple. It's very easy to understand. So if you have any questions, you can ask, and after that we'll take a break, and after that we'll move on to the exam kit questions. So any questions till yet? Any confusions?
Mm.
Okay.
No, I mean, I just think, that I have to practice a little bit.
Yeah, exactly. Once you practice this, you'll be much more comfortable doing all these calculations, right? So let's
Yeah.
take a short 5-6 minutes break, like, right? Just like always. And after that, we'll start with the exam kit questions. Fortunately, there are just 10 questions, and we'll be done when in just like 10-15 more minutes. Okay.
Okay, thank you.
Okay, let's resume. So there is only one thing that is left. We just have to spend 2 3 minutes more. So are you ready? Can you hear me clearly?
Yes.
Okay, sure. So on the screen, you can see that there is just a minor topic. I was going through the study text. I just found this one. So it's just a 2 minute thing, just a small thing. So what happens is that after we've done all this, sometimes there is a situation in which there is unfortunate incidents, like let's say, God forbid, a fire or an earthquake or anything like that, right? So in the factories, so it can result in inventory being stolen, inventory being destroyed, and everything like that. So obviously some sole traders who don't have like an accounting knowledge, obviously they will not know how to calculate the missing figures, and how to move back and stuff like that, right? So what happens is, let's read it from here. So traditionally, many businesses did not keep an accounting record of inventories. They would keep records of quantities, but given the proliferation of raw materials, would not complicate matters by keeping accounting records of cost and valuation, because the cost obviously kept inflating and deflating every year, every minute, every day, right? So instead, they would perform a year-end reconciliation of valuation using the principles discussed in earlier in this book. So according to the IS2, they would do. Okay. So it is also possible to use the methods that we have just studied in this chapter, right, to calculate the value of inventory. Remember that cost of sale is equal to opening inventory plus purchases minus closing inventory. We already know this, right? We have just illustrated how to work out cost of sale using margins and markup. We also know this. We just studied this. We can also use ledger accounts and cash records to reconstruct total purchases. Yes, that's right. This was the third method, right? In combination, we can use these methods to identify the value of either opening and closing inventory. So it's actually unfortunately not coming to the point over here. But the thing is that I'll explain you using this very example over here, that how do we find the missing figures for inventory. It's very simple. It's very commonsensical thing. It's very simple, right? Let's see. So Jack Spratt provides the following information about his business. Okay. So now you see he's using margin, not markup, margin. What happens in margin is selling price is 100%. Right. Now you can see the sales are given over here. Now there are three things over here. Very surprisingly, opening inventory, then purchases. Now this is not the closing inventory, but this is closing inventory after fire. Right. So there may be unfortunately some goods that he lost in fire. Right. So what is the cost of inventory lost in fire? He is asking us that what is the cost of the goods, what was the inventory value that was lost in the fire. We have to tell the
Yeah.
missing goods value over here. Okay. So the approach for these questions, let me tell you that let's make a mind map first, how we'll calculate such kind of questions. It's very simple. First, what we have to do is, by using this sales figure and this margin figure, we have to calculate the cost of sale, the full figure of cost of sale, because from these three figures we cannot calculate cost of sale, because two figures are given, full closing inventory is not given, right? Now if we find cost of sale, we'll be given with the whole amount, right, the full amount. That full amount we'll use to find closing inventory, the normal full closing inventory before the fire even occurred, right? So that we know the original figure for closing inventory. Now, if we know the original figure, let's take an example. Let's say the closing inventory over here was 5,000. Now you can see closing inventory after fire is 3,000, right? So the difference between them is how much? 2,000. So 2000 is actually the goods that are destroyed in fire. So this is the approach that we'll follow in these questions. Let's start to solve this. This was just an example. This 2000, just ignore this over here. Let's start to solve this. First of all, selling price, cost, and profit. Now, please note this cost is basically the cost of sales. We can call it the cost of sale, because if we minus the cost of sale from selling price, we automatically get which figure? Gross profit. Right. Now sales is given over here. First, let's ascertain the percentage. 100% fixed selling price, right? That's fine. Margin is 20%. That means profit margin is 20%. So the cost will be obviously 80% over here, right? So selling price is given how much? 100,000 over here. Yeah. So we have to find the cost figure. Now what we'll do is 100,000 is representing 100%, right? And we have to calculate 80%. We have to we jump down to 80% because we need just the cost over here, right? So this will give us the answer of $80,000. That means 80,000 $80,000 is the cost of sales over here. We have found one thing. We are almost halfway there. Okay. Now, what is the formula for cost of sale? It is basically like this: opening inventory plus purchases minus closing inventory, right? Now, what we do is opening inventory is given in the question. First, let's write the whole cost of sales. So, cost of sale we just calculated, it is 80,000, right? 80,000 is equal to opening inventory is how much? 10,000. It's written, right? Purchases are how much? 82,000. It's written in the question. But we don't know the closing inventory. We have to find this figure in order to find the missing goods that were lost, right? So what we do is just apply simple maths over here, right? And simple maths would be 80,000 minus 10,000 minus 82,000, right? And we'll get the closing inventory. That's very simple. So let's calculate the answer. Just a second. 80 minus 10 minus 82. So this is giving us the figure of 12,000. 12,000 is the closing inventory. Now you can see the closing inventory after fire is 3,000, right? That means when fire ended, when it erupted and ended, the closing inventory after the fire, after it was finished, was 3,000. So that means in between this 12,000 and 3,000, the goods were lost, right? So how do we calculate the goods lost? 12,000, the normal closing inventory, minus that one after the fire, right? And this will give us the answer of which? 9,000. Right? So this is the correct figure which was lost in the fire. This is the correct cost of inventory, which is option B, $9,000.
The cost of inventory, sorry, is the closing inventory.
No. Basically, it's just asking the inventory that was lost in the fire. It's just asking the value of inventory which was lost in the fire. But cost is just, what we value the inventory actually on. Right? We just had to just ignore this word cost, just call it like value of inventory lost in fire. What was the monetary value, the dollar value of the inventory, which was lost in fire?
Okay.
And that is $9,000. Okay, right?
Okay.
So these double entries you can also look. It's very simple. What we do is that for recording the closing inventory, we've already studied this as well. Debit we do inventory because in the financial position only closing figure goes, right? So debit inventory and credit profit or loss. Why we credit profit or loss? Because you can clearly see the closing inventory where minusing in the cost of sale. So anything which gets minused, or in other words increases the income, is credit in the profit or loss, right? Because
Okay.
if we are decreasing the expense, increasing the income, it means the same thing, and that is recorded on the credit side. This is the double entry for closing inventory. So what happens is that if inventory that was lost, that was a part of that had insurance with it, so what we do is debit insurance company, because this is like a receivable for us, right? This is like an asset for us. We have to receive the insurance money from the insurance company, right? And credit profit or loss, because in any case we have to remove the inventory, right? Because closing inventory is not lying with us right now. And if it was not insured, we just charge the loss in the profit or loss, right, as expense. So we debit the expense and we credit the profit or loss, which is still decreasing the inventory. Honestly, I've never seen such kind of a question come in exam, but still if
Yeah,
you
I hope not, because it's a bit, I don't know, I don't like this chapter.
yeah, but it's better than the ones that we studied before, like consolidation,
Yeah, I know,
bank and all of
yeah.
that, right? So it's very interesting. If you look at a bird's eye view, it's very interesting to understand, right? But I don't think, just don't focus on these insured, not insured, because I've never seen some questions on this, right? And rest of the things are just related to markup, margin, finding the inventory and all that. Most of the things we've already studied above in the previous chapters. Okay, right? And after that, successfully the chapter has been finished.